Hey everybody, how are you? It's time for our market update for real estate in northern New Jersey. We're going to talk about whether we are still in a seller's market or are things shifting. Also going to touch on the Fed cutting, Fed funds rate. What does that mean? And of course, always offering suggestions to buyers and sellers in northern New Jersey. I'm Stacy Esser with the Stacy Esser Group on behalf of my whole team. Thank you guys so much for listening and watching. Thumbs up, like, subscribe, do all those great things, and ask any questions you want in the comments. Let's dive right in. We're looking at northern New Jersey top appreciating towns. We can see there's still a lot of appreciation month over month in northern New Jersey, all through here. We could see that. But what I want to focus on is the data, the tracker, the numbers that tell the story of what is happening and what is going to happen. So let's start with one of the best numbers to look at, and that's our houses sitting on the market longer. This is a 24 to 25 year to date through August chart that shows us, yes, things are sitting on the market slightly longer, 30 to 34 days. Not a big change, but enough of a change. And also it's been changing for a few years, right? Now let's take a look over here in this chart. You could see we're looking at how many units were sold and how many are in pending, and then how many new listings have come to the market through August. And we can see that we are about flat for 24-25 in sold units. We're slightly less in under contracts, and we have slightly more new listings. What does that potentially mean for our market? Well, it means that we're seeing a little bit of a tug of war between buyer and seller. Sellers are putting houses on the market, and not all of them are selling. And when they do sell, they are still selling at a good number. You could see this over here. They're still selling 104% to what their last list price was, or even to their original list price, right? So that's telling us that we still have very high demand, but that things are softening up, that there's less competition, that maybe there are fewer buyers out there, but that these buyers who are still out there have a little bit more wiggle room than maybe you did a couple of years ago. The other big number to look at or to think about is how many houses are coming off the market. That I don't have a chart on that, but I can tell you that we are seeing a lot more homes come off the market and a lot more homes get price reductions. And that is simply because of that tug of war I explained before, where sellers are looking for one thing and buyers are simply saying no. A lot of that no is based on affordability concerns and how buyers have just been squeezed. Market prices for homes have been traveling north for a while, but wages really have not kept up. The other big thing to remember is that 65 to 70% of everybody who is selling is also a buyer. So when we have so many people in homes sitting with low mortgage rates, maybe 3%, and rates have been hovering high in like the 7s, well, that 4% spread between selling and buying just is not enough motivation for those people to get out of their houses. Here's last September. We shot up last September, right? We shot up to 7%. We shot up to 7%. We're now, and we stayed, there were little highs and lows, but we relatively stayed pretty high. We started trending down in rates in July. Look at this. But for the majority of what would have been our big spring season, we stayed high, hovering around 7%. And that absolutely affected the amount of houses we had, the affordability for the buyers, the pushback from the buyers to the sellers, the amount of homes that came off the market because the sellers were simply not getting the prices that they wanted. And of course, the price reductions rising. The price reductions rising. So yes, here is, this is Tuesday, September 16th. The Fed dropped the rates, the Fed funds rate. Rates jumped up slightly. However, I think we are, unless there's some data that comes out people are not expecting, rates are lower, and the question is, will they stay that low? So mortgage rates are down somewhat from their highs. Experts don't expect a dramatic plunge, but they do expect just more gradual relief. And best case is that rates will drift lower in Q4. Worst case, if the economic data comes in really, really strong, we could see a bounce back like we did last year. My advice is, if you're a buyer waiting for rates to drop to pursue buying a house that you're going to be in for the next 10 years, is not advantageous to you. You can work with your lender to float your rate. You will be able to refi for basically nothing if you're working with the right lender. We can help you with all of that. And there is still a lot of pent-up demand, so you will have more competition, and prices tend to rise when rates drop. So, and actually, if you look at the statistics, it's October and November that is actually the best time to be a buyer. For sellers, the better and more prepared and prepped your house is, the more money you are going to get. And please don't make the false assumption that just because it is technically still a seller's market, that any price you put your house on the market for, that it will sell. I'm Stacy Esser with the Stacy Esser Group. We represent all of Northern New Jersey, and I hope to see you all here again next month, and we dive into the data. Any questions you want, ask below. Please like, subscribe, and share, and you stay healthy and stay happy. Bye.